Will mortgage rates keep rising? What is the latest on home prices? That's what we're going to cover in this monthly market report. This is for you if you are a real estate agent, a financial advisor, or an attorney interested in market data to help you advise a client, or perhaps you are that potential buyer or seller looking for some direction. I'm Paulo Rodriguez. I've been a mortgage professional since 2005, and here is the market data that you need to make an informed buying or selling decision, or help your client do the same. There's a lot going on in the housing market. It is a very pivotal time for both buyers and sellers, and that's because there's a lot of economic uncertainty around us, which is causing a lot of people to push pause on their plans. But here is what First American had to say about that. When the economic uncertainty dust settles, those buyers and sellers who are on the sidelines will jump back into the housing game. Demographic trends support elevated purchase demand in the years to come. So it's a question of when, not if, for the housing market. So with that said, let's address the question, will mortgage rates keep rising? This is a big part of the fear and uncertainty that people have right now, because take a look at what they're seeing in the media. They're seeing headlines like, the US market stares down an even bigger economic shock. Mortgage rates near 7%. Mortgage rates reach the highest level since 2008. 30-year fixed rate mortgage jumps over 7%. These are all headlines that are out in the media right now, and when people see this, they get scared because they think that higher rates means people won't be able to buy homes and the prices will fall. That, however, is very one-dimensional thinking, because it would only be true if interest rates were the only input variable in the equation. But there are many more variables to consider to forecast home prices, such as the supply problem that we still have. People have fear, uncertainty, and it causes them to press pause on their plans. So being able to break it all down and explain what's happening, why mortgage rates are rising, what's expected from the experts, and of course, how we can help our buyers and our sellers is mission critical right now. So let's jump into exactly that. And here's a quote from Freddie Mac, which says, "The uncertainty and volatility in financial markets is heavily impacting mortgage rates. Our survey indicates that the range of weekly rate quotes for the 30-year fixed rate mortgage has more than doubled over the last year." So that is a significant increase. And the big question that a lot of people have is, why are rates going up so rapidly? In one word, inflation. It's not the Fed raising interest rates as many people think. Inflation is the enemy of long-term interest rates, and the Fed raises short-term interest rates in order to slow the economy so that they can curb inflation. Until inflation comes down significantly, we will see mortgage rates rise. So what are the ramifications of this? What does this imply? Well, with mortgage rates rising, it slowed down the pace of sales. At the same time, that has created more inventory or more options in the housing market. So buyers who have been outbid more times than they can count, or have been searching for that home that they just couldn't find, might find now to be the time that their dream home becomes available, and without the frenzy of those multiple offer scenarios and having to go under contract sight unseen. So that's an opportunity for buyers, and something that we need to be talking about as buyers hope to step into the market. The challenge on the flip side is affordability, of course. As mortgage rates rise, purchasing power goes down. So it's really important to have a trusted lender that you're working with. Make sure that your clients speak with that lender who can help them devise the right strategy, the right loan, the right mortgage rate, all of those different things that an expert can help guide them through. And of course, I would love the opportunity to be that lender for you. In times of uncertainty, you need experts on your side, and you need to be that expert in the market, connecting your clients to a trusted lender, which is a game changer right now, because in times of uncertainty, people follow the certain. To wrap up on rates, here is a quote from First American. "While mortgage rates are expected to continue to drift higher over the coming months, much of the rapid increase in rates is likely behind us. Nationally, while month-over-month house prices may decline, annual house price declines are not expected given the ongoing supply-demand imbalance and continued strength in the labor market." So what's ahead for home prices? What are experts saying? Let's look at a quote from a very well-known and renowned hedge fund manager, John Paulson, who called the 2008 real estate crash. And he said this: "We're not at a risk of a collapse today in the financial system like before. It's true, housing may be a little frothy, so housing prices may come down or they may plateau, but not to the extent it happened before." He's of course referring to 2008 and does not think things will transpire the same way. Let's look at what our usual experts are saying. Here's a look at the 2023 home price forecast from Fannie Mae, Freddie Mac, Mortgage Bankers Association, the Home Price Expectation Survey, the National Association of Realtors, and Zelman and Associates. If you look at the average of all of these forecasters, including the depreciation forecast from Ivy Zelman, you're at 1.8% appreciation. Here is an interesting study from Zillow in which they have forecasted appreciation or depreciation for 897 MSAs across the country. An MSA is a metropolitan service area. Think about that as a city or a region. They're calling for appreciation in 618 MSAs and depreciation in 257 and 22 MSAs having no change in value. Notice that in most of the depreciating 257 MSAs, the depreciation is categorized as less than 1% or 1 to 3%, which is very small. I think as we talk about a rising mortgage rate environment and the questions people have around home prices, people ask the question, should I buy a home right now? And one of the big ways that we can have this conversation is to remind our clients how home ownership wins over time. Hopefully you watched my report last month in which I shared my personal story about buying at the top of the market in 2006 and still selling for a profit years later. Home ownership is truly a long game, especially as we compare it to renting, and equity is a primary driver in that. So let's talk about equity for a moment. Here's a quote from First American. US households own $41 trillion in owner-occupied real estate, just over $12 trillion in debt, and the remaining $29 trillion in equity. The national LTV or loan to value in Q2 2022 was 29.5%, the lowest since 1983. Homeowners had an average of $320,000 in inflation-adjusted equity in their homes in Q2 2022, an all-time high. So an all-time high in equity in our homes. That is a major financial cushion for those who are homeowners. So why is this important? Well, here's a quote from CoreLogic to answer the question. For many households, home equity is the only source of wealth creation. As a result, recent record gains in equity and record declines in loan-to-value ratios will provide many homeowners with a financial buffer in case economic conditions worsen. In addition, record equity continues to provide fuel for housing demand, particularly if households are relocating to more affordable areas. So several big things coming up here. First of all, home equity is a huge source of wealth creation. The net worth of a homeowner is 40 times greater than that of a renter. So when you start to compare home ownership to renting, it is a huge differentiator for people's long-term wealth gain. Also, recent record gains in equity are a financial buffer in case economic conditions worsen. So when someone's asking, should I buy a home? You can either put all of that money over time into rent and not get that return, or invest it in home ownership and get a return on your investment. As you can see by the slide, being a renter over time is not a good business decision. So what's your story? What's your story with your team? What's your story with your clients? What's your story to yourself? There's about 3 stories that you can choose from. Firstly, there's that story that I react to the headlines and I see something, but I don't read the report and I don't go in and dive deep into it, so I really don't understand it, so I just believe the headline and what it says. Unfortunately, that's a lot of our clients, and that's why I do these monthly reports, to give you the facts about what's out there so that you can have a rebuttal to the misinformation they are exposed to. Now, the second story that you can choose from is being the blindly optimistic person, or the one that has blind positivity and kind of says, don't look over there, just keep looking ahead and let's not worry about it. And I don't think that's a wise way to go about things, and I don't think home buyers are going to be motivated to buy if you come at them with blind optimism. So there is the third story, which involves having a relevant market opinion based upon the facts. And again, that is why I do these monthly reports. You can take all of this information I've just talked about and create your relevant market opinion. You can deliver expert advice in a market like this where it seems very difficult to deliver expert advice. You just have to be well versed with the facts of this market. As I said earlier, in times of uncertainty, people follow the certain. If you're a realtor, I would love to speak with you about helping you make your next sale. That's a wrap for the October monthly market report. I appreciate you listening in. Forward, subscribe, share. I'll be back next month. But before you go, if you're looking to purchase, refinance, or know someone that is, and would like a no-cost consultation with me personally, feel free to reach out and I'll be happy to analyze if your debt is structured in the most optimal way or if there's room for improvement. Thanks for watching. Bye for now.